Kiran is saying Nifty spending time in the low usage area in daily charts and also formed some value there at 22,000. So why you did not foresee any breakout beyond 22,000? Let me check. Well, I cannot foresee anything. Low usage area. Which low usage area are you exactly talking about? At 22,000. Okay, just a minute. 22,000. Oh, you mean to say the extremes? Okay. Yeah. So I'm still not saying that we are not we are not completely rejecting that idea that we may break out. Because see, maybe we are not exactly at the top because we got rejected here, but we are not getting rejected sharply yet. I mean, if today makes a big down day at the top, that would be considered as a good rejection, and then we might go towards the lower end, maybe try and close this gap. Okay, but this is not enough actually. This is not enough. This is not enough. See, I don't know, but sometimes what happens, you look at these profiles. These are 30-minute chart periodicity, and these are daily profiles. And sometimes, looking at this time spent and lots of prominent points of control and all, you start getting an idea that, okay, the market might be strong and this might be absorption of supply. Might be. But what you need to understand is you need to look at this chart, right? This is a daily chart. Now, if you are expecting, let's say, how much is this? December, Jan, Feb. Okay, so 2 months, third month running. So 2 month long consolidation, if and that too is quite a wide one. See, narrow consolidations when they break, it's uh, it's understood that the number of time frames there are not too many. Limited time frames are dealing with each other. Obviously there will be all time frames involved, but their impact will be much lower, influence will be much lower. A few shorter or smaller time frames will be controlling that range, and then it breaks out. Okay, fine, you get a good breakout. But when the range is nice and wide like this, then you need to understand like multiple time frames are involved, and it's very difficult to break these ranges, right? At least in the direction of the trend. Because obviously if someone has bought here, say 21,200 on Nifty, and he is able to exit at 22,200, that's 1,000 points in matter of couple of weeks. That's phenomenal return, so they will book profits. So it will be very, very difficult for these ranges to break. So usually what happens, we break it a little bit, retrace back, form a little higher range, right? So that is the way we kind of keep progressing, edging the range up, and then finally at some point in time, either the exhaustion becomes too much and we get a bigger inventory adjustment, or then the pull of this value area slowly goes on reducing, and then at some point in time you get a very, very sharp spike up. So what exactly is going to happen is too soon to tell, because we are practically inside the same range still. But I'm not denying that we might get a breakout, but we need to wait. And the longer we have to wait, the longer that wide range multiple time frame theory takes hold, and harder it becomes to get a very sustained breakout, something like we had here. You can see something that we happened after a small range was broken, we get a sustained move up. So it has to be set up correctly. You can clearly see here we did go below these recent lows, took out the stop losses, check this last point of demand, and it was not checked multiple times. It was just checked once, and we were rejected. And then the shorts were in denial, selling every pullback. Finally, at some point in time, they give up, and then we get that sharp short covering rally, followed by a very, very sluggish uh, upward to sideways move that is happening on the charts right now, which is causing all sorts of confusion.